much. Okay, what has gone so wrong with Zomato? Let's bring in Mangalam. Mangalam, we're scratching our heads over here because even sequentially that profit number has improved at about 175 crores. So what's the issue?
Well, the only issue is that perhaps maybe the street would have expected the growth from last quarter to continue into this quarter. But last quarter is a seasonally strong quarter, that's Q3. Apart from that, there's no real problem that is coming from the overall performance of Zomato. The reason why the stock would perhaps be lower is also because it's rallied over 200% in just the last 12 months. If you just take a look at the numbers that the company has reported, it's a 73% revenue growth that they've reported, 3,562 crores. On the EBITDA front, there is a gain of 86 crores. This compares to the loss of 226 crores. And that was pretty much understandable because, the company has been EBITDA profitable for the last 3 quarters. So the base quarter is the last quarter where the company reported an EBITDA loss. The net profit is 175 crores. Now, you would be, tempted to ask, why is it that the EBITDA is 86 crores and the net profit nearly double of that? That's because Zomato, with having around 12,000 crore of cash on their books, also has a large proportion of their earnings coming in from other income. That's about 235 crores, which is a jump of around 37% year on year. In terms of the food business, operating leverage is clearly playing out. Growth in the food business is lower than the overall consolidated revenue growth. That's because it's actually been led by quick commerce. So food delivery growth has come in at around 48% on the top line. The EBIT actually has grown at around 247%. So their margins have improved by nearly 1,000 basis points from 6.9% to about 16.2%. Quick commerce, and here's where the big driver has come in. 111% growth in the company's revenue out there in Blinkit. 769 crores is what they've reported on the top line, and they've turned EBIT positive. So from a loss of 179 crores same time last quarter, they've reported a gain of 2 crores, and this is largely in line, in fact slightly better than management estimates of being adjusted EBITDA profitable by the first quarter of FY25 or before that. Well, they've done that before that itself. Hyperpure has seen a revenue doubling, but on the operational front, it's still loss-making, around a 16 crore loss versus a 40 crore loss. But, all the parts are playing well for Zomato, but the food business is growing slightly shy of the overall company's growth, but contributing a lot more to the EBITDA. And the QCom business is driving the growth with about 112% growth and now has turned operationally profitable as well. Maybe a bit of profit taking is what we're seeing alongside, the street waiting for the management commentary on the way forward as well. But these numbers, not really anything to, suggest there's a big dip in the stock or no operational decay as the numbers are reported.
No, absolutely, yeah. I've noticed that. Glad you pointed that out, Mangalam, that quick commerce has broken even in this quarter. I don't know if you still try and nitpick. I mean, if someone wants to view this sequentially, then the food growth, the food business growth sequentially is actually very flat. They did revenues of about, consolidated revenues of about 1,700 crores on the food business in the December quarter, and they're still around 1,740. So if you want to, quip over something and, sort of nitpick, maybe that could be one reason. Mangalam, your thoughts?
Yeah, that would just be nitpicking because if you looked at the business sequentially this time around, there is an element of seasonality. You know that October, November, December as a quarter is seasonally stronger than what you see in Jan, Feb, March. And in that, if the food business is actually, the same as what it was in the previous quarter, that's a positive and not necessarily a negative because it turns out that people are ordering the same amount that they did in the festive season, which is between October and December, as they did in between Jan and March. So that should actually be seen as a positive rather than nitpicking over no sequential growth, especially in the food business, because the element of seasonality out there.
Okay.